There's a lot of concern out there about what a shrinking US population could mean for our economy going forwards. Obviously, there are a lot of social things that go into that, but from a purely economic standpoint, what does a shrinking US population mean for us? We're not there yet, but it looks like in the next 5 or 10 years, that could be an economic reality.
Yeah, I think that's something that's worth diving into today because as we've seen, and this is really the case across a lot of Western countries, Japan as well, where you have the rate of births is not quite necessarily keeping up with the death rate. And so in the US, we're just in barely in positive territory. About 500,000 people a year are kind of organically added to the population of the US, but this continues to trend downward, unfortunately. And a lot of that's because of the social dynamics involved. People are waiting till later in life to have children. Some people are, not prioritizing that as much as they did, 10, 20, especially, 50, 100 years ago. And so we've just seen a slower population growth. Now, I think immigration is something that's worth talking about because that has contributed to our population growth. And I think today we just kind of want to talk about, the dynamics behind this and where exactly you can get that population or replacement for that population to lead to more GDP growth in the future.
Yeah. So immigration, like you mentioned, one of the biggest, most important components of this conversation. Like you said, 500,000 kind of organic adds to the US population last year. Well, 2.8 million inorganic adds through immigration. Kind of how we'd view a company's earnings is kind of the analogy I'm making there with organic. Inorganic is like an acquisition of more people through immigration. 2.8 million people came into the country through immigration last year. And about 670 of those were legal immigrants, got an immigration visa through the US, came here through the process, and the remainder of those being undocumented immigrants. And really that's what's kept the US above a lot of European countries, as well as Japan, who have seen that population decrease that we were talking about.
Yeah, and I think another problem with the population, shift or slowdown is the dynamics of age within the population. Because if you had, an event where a lot of elderly people passed away that weren't contributing to the economy, obviously that would be terrible from a social perspective, but from an economic impact perspective would be, less significant. But what we have is a lot of that the age shift is going to those later generations, more senior folks, because you have the baby boomer generation kind of leaving the workforce. And that's leading to some even more significant economic implications, because now you're dealing with a more senior population that has to be more taken care of rather than contributing to GDP. And so it's not only the fact that the population growth is slowing, but you also have a huge contingent of the population that is leaving the workforce, that is, kind of drawing on resources from the economy rather than, pushing or contributing more. Of course, spending is still, of course, contributes to GDP growth. And seniors are still going to be spending, traveling, and that's a part of that. But as far as where do you make up those workers is part of the question as well.
Yeah. And so one last thing I want to add on immigration is the benefit to the US is that a lot of immigrants as a whole are more working age than the current US population. So that does help add a lot of working age people relative to kind of our dynamics here. But even still, with the baby boomers reaching kind of retirement age and, getting into their, 70s, 80s now, you have a big strain on Social Security, on a lot of these programs, a lot of more spending in that regard. Medical care, we've kind of stayed at a more or less consistent death rate as a percent of population, just from one, that we have a larger cohort of old people right now, but also, medical advances helping keep people alive longer, living healthier lives, which is an amazing thing. But from a Social Security perspective, that's a lot more payments. You have more people receiving payments for a longer time. And that's created a lot of question marks around that whole program, where on its current trajectory, Social Security is really only expected to last another 10 or 12 more years, after which it'll only be able to make about 3/4 of the payments that are due. And so, we're looking at different options of either reducing benefits, moving up the retirement age, or increasing taxes to make up for it. None of which are very politically, favorable moves. There are no political winners when it comes to touching Social Security. So it's been kind of just kicked down the road as we've gone, but it's going to get harder to fix the longer we delay on it.
Yeah, I mean, exactly as you said, you have to look at it from one of two ways. You either cut the cost, which means you have to reform Social Security and either, extend the retirement age or extend where benefits can be, taken, or you have to increase taxes and Social Security taxes in order to make that more solvent. And neither of those are very attractive for politicians, certainly if it comes to, the social reaction to all of that. And I think that if you were to see either of those things, it's kind of a negative for the economy and for markets, because that's just fewer dollars that are flowing through the economy, whether that means because more are taken out of taxes or fewer issued, as Social Security benefits. And whenever it comes to economic activity and economic growth, of course, money being put into the system is the most important thing. And so either one of those, neither of those are super palatable from, financial markets perspective. But as you mentioned, something's going to happen in order to resolve that issue, because it's not a matter of if, it's a matter of when, as far as our current trajectory goes. And so it's going to be interesting to see how we deal with that Social Security issue moving forward.
Yeah. And so shifting kind of to the broader economic implications here is, no matter where it comes from, there will be impacts to, the economy if the population decreases, depending on if that's, just throughout time as birth rates are lower, or kind of the most pressing expectation is that immigration is a lot lower. And, it might not push us into a net loss in population year over year, but it's going to severely reduce that, the amount of population growth that we see is going to kind of manifest itself in a number of ways, particularly GDP. We've, kind of discussed it already, but reduction in population, reduction in GDP, whether that's elders who are spending their Social Security, they're spending it or investing it, and those are dollars that are going out into the economy. Or if it's more working age people, contributing to the GDP through their trade, and along with the spending that they're doing. And then additionally, you have inflation, which I don't really want to belabor that point, but if there is a reduction in immigration, kind of those working age people, like I said, the broader US population is older, it's less working age than the immigrant population. And so that's, going to have a upward impact on inflation. It's going to push inflation up a little bit, unless we can, accommodate that in a few different ways, which I want to kind of get into as we go here. Is what do we do about this? Obviously, we can't, fix the population crisis ourselves or anything, but like what's, how do we go about this? How does the economy react to a smaller labor pool?
Right. And I think there are certainly some investment implications there to kind of start off with, and then we'll go through some, potential, cures for GDP growth in the face of a slowing population. But first and foremost, I think, and we talked about this on our healthcare podcast, but senior related economic and market activities, I think, are going to be big. So whether that's senior housing, whether that's medical devices. There's going to be more diagnostics, more treatments. So you're looking at things like hospitals. That's an area of the market I think is going to benefit from this age shift. Now, that's just kind of a way to respond to this changing dynamic, because that's not a solve for the fundamental issue as in regards to GDP growth. But as far as a way to invest, I think looking at, medical related activities is a way to kind of hedge yourself, as far as if there was an issue with the broader market. Hey, you can say, well, there's this demographic shift happening, average age is increasing. Well, there's going to be more care needed for those individuals, and a lot of those medical healthcare stocks, even some pharma, I think are going to benefit.
And so as either immigration comes down or more people retire and enter their, kind of golden years, as they call them, the population, the working age population, is probably going to shrink, or at least, again, that growth is slowing. And so, kind of looking at ways to address that is primarily through automation. A lot of immigrant jobs are kind of those agricultural, those more, unskilled manual labor type construction jobs. And, we've seen a lot of, US startups over the years, try and solve for these things one way or another through automation. If you've seen 3D printed concrete houses, I don't know if that's ever going to take off, but people are trying to find ways to automate that stuff. I think something that's really interesting that is going on kind of more broad scale right now is the automation through agriculture. You see companies like John Deere coming out with these, basically driverless tractors that can do a lot of these functions for you, which has really created and pushed the shift away from kind of your family farms into your large agricultural businesses, because they can afford these multi-million-dollar pieces of machinery. So that's an interesting shift in and of itself. But, I think that's going to be kind of the first way, at least in America, that we tackle this problem, because that's kind of how we've always tackled a, smaller manufacturing base. Whether you're talking about Detroit in the automobile industry, looking at, kind of what Tesla is doing with their very automated, very efficient, production lines, or, kind of going forward, like I mentioned with agriculture, just driving productivity through kind of that automation.
Yeah, I think that's a perfect segue into the solutions for when you're dealing with a, either shrinking or slowing population growth. Because a huge portion of that is going to be productivity. So if you can, for each worker, if you can get more output, you don't necessarily have to increase the population at the same time if your output per worker continues to grow. So kind of historically, at least in recent history, productivity growth runs at about, increases at about 2% per year. But I think with the advent of AI, robotics, a lot of these autonomous systems, you could see that even grow, more significantly, because we're talking about a lot of these AI applications are able to essentially replace workers or just augment them in order to really boost that output. So maybe all of a sudden you have one person can do the work of four people via, a software co-pilot, where a coder is able to, use an AI assistant to run many more lines of code than they would have been able to historically. Or you've got a manufacturing worker is able to use through robotics, is able to produce many more units of whatever kind of cog they're producing. Or you have, things like autonomous agents that are able to help people in kind of a, call center respect or customer service, function. I think a lot of these are going to lead to that more significant productivity growth, because that's what can kind of get you out of a slump. When your population isn't growing, you don't have the workers that you might need to. And I think a lot of the growth in productivity is not just because for the sake of productivity, but it's to solve these exact issues. If you have a small labor pool, if you can't get the workers that you need, what are you going to do? You have to innovate. And so companies that are, creating these products, the software solutions, the physical robotic solutions, are addressing this issue already ahead of time. And I think it sets us up well if we are to enter a situation where, say, the US population is actually shrinking rather than growing, it doesn't mean that GDP necessarily has to shrink. We can kind of solve that with productivity gains.
Yeah, and I think that's a really good point because, maybe I'm overly optimistic about the US and US exceptionalism, but I am a true believer in that. And, if there's one thing that we've learned looking at the economy over many years and just learning about it long before my time is, it's necessity is the mother of invention. The US will find a way. And if we start running into true labor shortages, that's going to prompt some of the fastest development of any of these productivity gainers that we've seen. One other kind of solution, or at least key component to this conversation of GDP with a lower population is keeping the velocity of money high. So the velocity of money, for those who are unfamiliar, is it's not the amount of money out there, but it's simply how often does that money change hands. If I make it $1,000, if I have $1,000 to spend just discretionary money and I stuff it under my mattress, that's going nowhere. That's doing nothing. But so the velocity of money, that money is zero. If I decide to go spend that, I go, hire you to, do something for me. I pay you that $1,000. Well, now you have $1,000 after, paying your tax to go do something of your own. So now you have $700 or something to spend. And if you go spend that, then that's a high velocity of money. It's changing hands back and forth. It's the same amount of total money out there, but the more people spend it, the more rounds it can make in an economy, the more GDP you can derive from those same dollars.
Right. And that's what we've seen in times of economic recession. Whether it's the federal government or bank lending standards kind of shift in order to get those dollars flowing throughout the economy. Because if you put that $1,000 in the bank, but then they lend it out to another individual and that person spends it, it's very similar to, keeping that velocity of money high. And I think it goes hand in hand with the money supply in general. A lot of people will track M2 money supply as kind of the dollars that are frequently flowing throughout the economy. And we've seen that grow substantially. It grew a lot out of COVID with the intervention from the Federal Reserve, the federal government, and that will lead to more economic growth because you just have more dollars out there to change hands. More can go towards consumption, more can go to, capital intensive projects, things that are going to promote business activity in the future, as long as it doesn't lead to too much inflation. Of course, that's what we saw coming out of that COVID era stimulus was too much inflation. But if you get modest growth in the money supply, it's kind of healthy from a business activity perspective, from a consumption perspective, and can help you out of that slump if your population is small. I mean, we saw Japan dealing with their issue of, their population, worker productivity by really trying to promote the money supply, keeping interest rates extremely low and negative in some circumstances, in order to get more dollars flowing throughout the economy. And so that's another way that you can kind of offset a potentially slower population growth.
And so I think Japan's a really interesting example there of, kind of that money supply and the velocity of money particularly, is that recessions can be almost kind of self-fulfilling prophecies sometimes. If enough people expect there to be a recession, they start hoarding money. Your M2 and your velocity of money both drop precipitously. And then you create a real recession because no one's out spending money because they're all hoarding their money in expectation of a recession. So it's just kind of an interesting thought, where Japan's kind of been stuck in this low growth, no growth phase for a long time. And so if no one's really expecting there to be a big reason to, like big wage gains or big reason to go spend a bunch of money, they're going to kind of, hoard their cash, set it in the bank, but not really do much with it. They're not investing in stocks. They're not, doing a lot of these things because traditionally inflation's been very low there and wages have been very stable. And so it's kind of like created people hoarding that cash instead of going to spend it, which like in turn kind of self-fulfilling prophecy there.
Right, exactly. And I think one kind of final way that we can talk about offsetting the population issue is through labor force participation. Of course, we are not at full participation of working age individuals here in the US. So through a combination of maybe it's higher wages, maybe it's, government policy or tax, benefits for workers to kind of incentivize that labor force participation rate. Well, that can help boost as well, because, if what you're concerned about is not necessarily the whole population from a GDP perspective, it's about the workers who are working and have jobs. So whenever you can increase the participation rate, more of those individuals from, call it 18 to 64 years of age, or maybe 18 to 70, if they're working and in the economy, then that's going to be a big benefit to GDP growth.
Yeah, it'd be interesting to see kind of where that labor force participation can come from and, what the government can do to incentivize that. The last huge uptick we saw was really in the 70s, 80s, where women started entering the workforce at record numbers. And now, nowadays they make up more than half of college graduates. Back then they were in the 40% area. And so that was a huge increase to US productivity, because you have about half the country, coming back in and having the workforce as a real option there. And so, it'd be kind of interesting to see if we can find another, big wave of that. I mean, obviously any labor force participation gains are going to be, pale in comparison, but, some incremental stuff to encourage workers at the fringe to come back into the workforce and participate.
Yeah, I think just kind of broadening out from this conversation. I think the population situation it's not necessarily a red flag, but maybe a yellow flag at this stage, something that I think is on the minds of investors and something that we're thinking about. But of course, as we just mentioned, there are ways to get through the situation. I think a huge part of that's going to be productivity. I mean, we've talked so much about AI and, efficiency from that recently, and I'm excited to see how that really bolsters the population going forward.
Yeah, exactly. Thanks, Victor.